Welcome to today's edition of LendTech Live. Joining us today, Amanda Phillips, Executive Vice President of Legal and Regulatory Compliance. Welcome.
Thank you.
Thank you so much for joining us.
Thanks.
With Mortgage Cadence, we have a full bank of executives who come from the loan origination and the operation side. So we want to dig into how you got into compliance and understand the moving target that affects our profitability. So
Absolutely. I got into compliance by accident.
nobody gets into this
by accident. That's right.
Right?
I'd been in the mortgage business for years. Started originally back in 2000 and left in 2005 to go to law school. And thought I was never coming back to the mortgage business. But within about 8 months of graduation, I came back into the mortgage business and ultimately into the compliance department for a mid-sized independent mortgage lender.
So what was the draw? What brought you back into banking?
You know, honestly, it was the timing of graduation, and I just discovered I was good at mortgage, and I liked it, and I missed it after being out for 3 years. Yeah, and then that's the crazy part is then you find somebody that actually likes compliance.
Right.
You geek out a little bit.
It's a rare bird.
It is.
So share with us a little bit about this moving target of compliance. It's such a big part of mortgage lending today. It's always been, but it's increasingly becoming a huge weight on the profit side of loan origination. So let's speak a little bit about this moving target of compliance.
Absolutely. I mean, over the last 7 years, it's just been one thing after another for lenders. And let's face it, compliance is changing all the time, and it's just downright hard. I mean, you have to train your entire staff on every new regulation that comes out, plus be ready to handle it from the policies and procedures perspective, and is your technology ready, and how do you just get your arms wrapped around all of that? It's just difficult.
So do operations people have to become compliance experts, or what options do they have?
You know, wouldn't it be great if everybody could be a compliance expert? But you just can't. They need to be mortgage operations experts. But anymore, we're putting more and more pressure on our operations folks and even our sales folks to understand compliance at a level that they've never had to before.
Right.
And it's just driving up the costs for all of our lenders to keep all of their staff not just mortgage savvy, but compliance savvy.
So is that realistic? With all of the things that they have to be experts at, is it realistic to ask that of an operations
I don't
person?
think it is for everybody. They're mortgage professionals. They're not lawyers. They're not compliance experts. And to expect every single person to be able to do that, I mean, that's asking a lot of any individual to be experts in all of those things.
So how does a lending institution solve for this? Because I would think anytime you can outsource to subject area experts, you're in better hands than leaving it up to internal training and monitoring.
Absolutely, and that's part of the cost of compliance right now is leveraging outside experts so that from the lending institution's perspective, they know that they're getting expert advice. But if you can outsource and shift some of your risk and drive down your own compliance costs, it's going to drive up your own profitability at the institution.
So are you actually able to shift that risk? So you could say to a third-party provider, look, you now own this part of our business. Is that the way regulation works today, or do you still have complicity to the outcome?
You can't fully outsource compliance. So part of the regulatory shift over the last 7 to 10 years is that ultimately the regulated entity is still responsible.
Okay.
So when we think of our regulators, whether it's the CFPB or state regulators, under the current regulatory structure, you still ultimately hold your compliance and regulatory responsibility. You have to understand those responsibilities.
Okay. At the executive level, right? Not just at operations?
Yep, at the executive level. But you can, through some providers like Mortgage and Compliance as a Service from Accenture, you can shift compliance execution risk and increase your profitability from that perspective.
Okay, so then when we look at the overall cost of closing a loan, what percentage of compliance is falling within that expense?
Oh my goodness, I would have to do the math, but it's a good chunk. It's a lot of money these days.
Wow.
Your cost of compliance on a given loan, when you spread it across, right, your production, it's a lot.
So can can you assume that a certain percentage of that expense is internal, and then a portion of that's going to be external using a third-party provider, whether it's Mortgage Cadence or any of the other compliance solutions providers out there?
Absolutely. So you're going to have internal compliance costs to maintain policies and procedures, have your internal compliance staff. Just depending on the size of the institution, that could be a very large staff.
Right.
You may use third parties to help augment some of that, especially if you're a smaller institution, you can't keep a full-time large compliance crew on board. But then you're always going to have outside, whether it's a compliance technology or it's a quality control outsourcing group to check your loans after closing, or external law firms and compliance consultants to help you stay up to date on all of your responsibilities.
Right, okay, so then it goes back to this question of, okay, if this is just a part of doing business and it's part of that loan closing expenditure, help us understand sort of the 1, 2, 3s of how you should be assessing for our listeners, assessing when it is that you should bring in a third party and how you can start to manage some of your costs and maybe increase your profitability around moving from internal to external.
So you're always going to have some compliance costs. We're just not going to avoid it anytime in the near future, in my opinion. I don't see all of this stuff going away. We've implemented a lot of regulations over the past several years. But there's the human factor, right? So you're training down into your operations crew and tasking them with compliance tasks that maybe somebody else is better at. Maybe they're more efficient at it. Maybe that's what they do, is do the people work, right, in a more efficient way, and that's what they're experts in. So instead of tasking your operations folks with being deep compliance professionals, can you outsource that piece?
Right. And then they can focus on the borrower experience.
They can focus on the borrower experience and other operational tasks and continue to be mortgage professionals.
Got it. So if we wanted to say to a lending institution that in order to pull the profit lever, this is one area, if you look closely at how much of your loan origination costs are going towards compliance, really analyze that number, what would be some of those key things that you would want them to understand?
I'd want them to really look at what their compliance cost is. I think sometimes people don't fully appreciate how much they're spending on compliance and where they can really find efficiencies within their institution without they can't get rid of their responsibility, but can you both improve your compliance, right, by finding some outsourced expert in some process, and improve your profitability? Can you get both? Better compliance and better profitability at the same time? And I think it's possible.
What are the costs around, I don't want to say non-compliance, but let's just say that there's something that you missed?
Well, the risks vary. The risks vary from redress to a consumer, right? It could be very small. You under-disclose something at closing, and so it comes up in a post-closing audit, and you need to cut a check and mail a check to a consumer. So you have some redress to consumers, all the way up to massive risk from regulators and civil money penalties that we've all seen have happened to some of the larger institutions in our business over the past several years. It can be quite astronomical and in the millions and millions of dollars.
What?
Yes.
Millions of millions?
Yes.
Unbelievable.
Easily, we've seen civil money penalties, in the 20s and 30s, millions and above. You can go out and search them.
Is there insurance for that?
Well,
you
actually can't insure against civil money penalty risk, and the reason is that if you think about the legal concept behind it, the incentive to doing the right thing and to following the regulations is you could have this penalty. Well, if you could just outsource or insure against that, you might lose the incentive of doing the right thing.
Great point. Amanda Phillips, amazing information. For more information on how to get your business compliant, join us over at Mortgage Cadence. We're going to be bringing this type of content to you every single week. Stay tuned for the next edition. Thanks for joining us today on LendTech Live. Thank you.
Thank you.